we just don't see enough capital going into Africa. What is it that they don't see?
It's a beehive of activity, absolutely buzzing. It may not measure to other parts of the world, but we see significant growth in investment in the fintech space. One of the key concerns of the people was access to financing for specific needs. UNESCO has gone and painted a picture on the gap of financing across education globally. $97 billion every year. 70 billion of that is in Sub-Saharan Africa. How do we solve this problem? Africa presents an opportunity where purpose-driven lending becomes even more interesting. We are the conductors of the orchestra, bringing together multiple players to create that ecosystem. You can't wish for more than finding fertile ground that you can throw seed and it just germinates and grows.
I do believe Fintech for Good is a business model.
One of our mantras as Furaha is build scale. Don't worry about pricing now.
Good morning, ladies and gentlemen, and welcome to today's episode of Couchonomics with Arjun. Joining me, I wouldn't say all the way from Uganda, but I want to make it dramatic enough and say joining me all the way from Uganda, but in person in the studio, is Yustus Aribariho. I've got that right.
You got it right.
Who is the co-founder and CEO of Furaha, which is part of the SC Ventures portfolio companies. He's very kindly accepted to come and do this interview or do this podcast with me on a holiday, apparently. I had no idea that today was a holiday, but I was reminded. Yustus, welcome to the couch.
Thank you, brother. It's always nice to be here in person. I mean, I follow your podcasts. I'm a big fan. Hope I can make it worthwhile.
That's incredibly flattering. Even if it's not true, it was a good plug.
It's really true. You should actually go check my socials. No. Your socials, you'll definitely find me there as one of your followers.
No, excellent. So Yusuf, it makes me, Yustus, it makes me incredibly happy because I usually get quite excited when I get, I guess, fintech founders on the couch. I get a fair share of mix of venture capitalists. I get my fair share of bankers, but what this show is all about is actually, understanding exotic and interesting markets like Sub-Saharan Africa, and I think we're going to talk about that, and obviously hearing from, I guess, the innovators and founders about, their wins, their challenges. Yeah. So I think hopefully we'll bring that to life. We have quite a large segment in terms of, or diverse segment of listeners. So I guess let me throw out the first question, which is sort of painting the picture of, state of the nation, Sub-Saharan Africa, fintech. In your words, paint a picture, please.
So that's a good segue into it. And I was just thinking, what would be the best way to really paint that picture for you? One thing is, every time people think of Africa, first, they think of the wonderful wildlife, safaris and exciting stuff. So that is there too, just to be very clear. But the fintech world is very vibrant and evolving. So we are clearly seeing, for example, we clearly see 3 emerging cities being the crazy hubs. We're clearly seeing Nairobi, we're clearly seeing Cape Town, Joburg taking the lead, as well as Lagos, Nigeria. We're clearly seeing that emergence in terms of who is leading in attracting a big number of fintechs. Other countries are not far off from there. They're also coming through. And in this conversation, as you've said, Sub-Saharan Africa, but if you go up as well, in the other part of Africa, of course, we know Cairo and Morocco have always had strong hubs. So when you look at the money coming into these 3 cities, I mentioned, Joburg, Cape Town, Nairobi, Lagos, maybe 4 cities for that matter. I don't want the South Africans to get angry with me. Significant amount of money coming and those hubs really taking off, which is quite great. Mobile money has revolutionized, things across the continent, bringing very many people into a money economy. In Africa, as you recall, the global statistics would usually measure access to finance from a access to bank perspective, how many people are banked. I think Africa has reversed that significantly because, you possibly don't need a bank account as long as you have a mobile money account. And that is really getting people in a money economy. When you look at the significant work Safaricom and M-Pesa, Vodacom have done, and now you look at MTN mobile money and you look at Airtel mobile money, huge investments from MasterCard coming into some of those spaces, you'll understand what I'm talking about. So huge movement there. Of course, digital banks are starting to thrive. So we've seen their emergence, and we were talking off camera earlier, and you talked about Time Bank, which has become a unicorn. So great to see a unicorn on the continent. I mean, I think the statistics show that we have now 9, although most parts of the world have already since moved on from that number. But we see digital banks coming through, and that's going to be very pivotal in the development of the whole banking ecosystem. Why do I say that? Because of the demographic structure. Africa has a very young demographic, and definitely digital banks are going to be the in thing. I think we are going to see the death of traditional banking in Africa, and we already see it with the traditional global banks shutting shop and moving out. We saw it with Barclays shifting. We know Standard Chartered has exited a lot of their consumer business in some of the places. So you'll see a lot of emerging digital banks because of the demographic. I mean, it's known that 70% of Africa's population is under the age of 20. So if you do that, if you think through that, and with the penetration of the mobile device, you can only see that, digital banks are the right thing to do. So we see that happening. The payment space has moved much faster than everybody else in the fintech space. And that was very important because it paved and created the rails for additional innovation. What was really important was to first get money in people's hands. That was not possible if the payments were not made seamless. So today with mobile money and all the other payment vehicles that we see, now money is reaching more people than it used to do. So then it creates room for additional innovation. Lending and credit is now emerging as a challenge at payments. Now we see, a lot of emergence in using alternative data to create credit models that can enable people borrow and access credit. So that is now emerging, and it has its own challenges, but it's now emerging as a challenge at payments. Blockchain and crypto solutions are now coming in, especially to enable cross-border payments in the corporate space and SME space. And on the back of this Africa Free Trade Treaty that was signed, I think we're going to see a lot of innovation in that space because a lot of companies you'll see an emergence of fintechs in that space. We've already seen them, but you are going to see it even grow much faster as these corridors start to open in support of that trade, of that treaty. So look, it's a beehive of activity, absolutely buzzing, and excited to be part of that group.
So interesting, right? So, Yustus, I'm going to just give you my perspective, rightly or wrongly. I'm no expert in Africa, although I've tried my best to get my hands dirty, and I've made a few trips. And I was mentioning I've been down to Rwanda a couple of times for the Inclusive Fintech Forum, which has been great. On the show, I've had obviously Cohen, who's the CEO of the Time Group. I've had a bunch of the founders from Egypt. I've had Helios, which is a very large private equity player who participates. I've had Satoyo from M-Pesa, right? So I'm able to kind of paint a poor picture, if I may use that. But here's how I see it, right? And I want to kind of hone it into a very clear question. You say fintech in Africa, first thing, correctly so, mobile money comes to mind. Mobile money, but big players in mobile money, right? That's the first thing which comes to mind. The second thing which comes to mind is an underserved market, which is digitally savvy, youthful, exuberant. I've had the opportunity to meet quite a lot of them during my travels. And yes, I have done some of the safaris. I went to see I was up in Rwanda. I went to see the silverbacks and so on and so forth.
Nice.
Right? So underserved market, right? I then also see, in my humble opinion, complete disharmonization from a regulatory perspective, right? Which, belies reality for me because, Africa is not one country. Africa is, 52 or 54. I've lost the count. But
55.
55 countries, right? There you go. It's a huge number of countries. So it would benefit from regulatory harmonization. But one thing which keeps coming back to me is we just don't see enough capital enough funding going into Africa, both from the African investor itself, which I'm assuming there is a whole community, and then the international community. What is it that they don't see? Why are they not seeing the opportunity that both you and I have just painted? Well, you've done a better job than I have.
Yeah.
In the last 5 years, why are we in the same slum as the global slum? Because the global slum has been driven by, I think, stupid valuations and crazy attitudes to growth and so on and so forth.
I think so. Partly true to what you're saying, but also partly we see a significant growth. It may not measure to other parts of the world, but we see significant growth in investment in the fintech space in Africa. When you look at the statistics from 2020 to 2023, you'll see a jump from about $2 billion investment in 2020. It moved up to about $6 billion from what is recorded to about $6.4 billion around 2022, 2023. There was a bit of a dip and it's now starting to come up. And I think last year it's about $5 billion. So a significant chunk of money going there. I think one of the challenges of investment in there's a word that I heard from Jeff Bezos called credit dividend. I think one of the challenges across the continent is this credit dividend, and it's on everyone's lips. And it has been painted globally by either rating agencies, but by what you see on the media, whether it is related to sovereign risk, etc. And those connotations have an impact on how investment is going to flow. Now, you still see a lot of challenges around, and it accounts for why it's difficult to raise funds to actually attract money that comes into here, or even building the ecosystem for an entire investment cycle to happen and thrive. So there is a bit of that. The second one has really been around, even when there's investment, how do you create that enabling ecosystem? So it is partly also to human resource capital that is right there. You see, when you look at what happens in the valley, in Silicon Valley, not only do you have investment, you have the legal framework and lawyers who do that, IP lawyers. You have an exit strategy in terms of, secondary market that can come in, etc., and listing on the stock exchange. So some of these things are still on an evolving path. The good thing is that what you still see in Sub-Saharan Africa is not rewriting code, it's actually writing code from basics, which then gives even a bigger opportunity. The investor who has the trust, who feels they have the capacity and appetite to invest, will not worry about those in the primary sense. We'll look at that at a later stage in terms of, what happens, how do I exit, etc. So to answer your question, one, we really see a lot of money coming in from an investor perspective. Is it enough? Possibly we can do more. Is it something that we should be concerned about? Yes, because we are still on the journey of building our credit dividend. And thirdly, we are still on the journey of creating some big success stories that can emerge from the investment that has already come in. One can argue and say, we're already seeing some of these. They are not yet at a scale that would attract the whole world and say, I want to go there. Do people see the opportunity? Absolutely. I don't think that is questionable, because you can't wish for more than finding fertile ground that you can throw seed and it just germinates and grows. Of course, we are still on a journey on other areas. Infrastructure to grow things at scale, which is part of that ecosystem. Although we've seen a lot of mobile penetration, what about access to internet, that infrastructure? What about the regulatory framework? So a few of these things are starting to form up. And I think we've completely shifted. We've seen a significant shift. Had it not been for COVID, in fact, the acceleration would have been much faster. Because when I look at 2019, 2020, the growth path we saw with the likes of Flutterwave and all these other folks, the pace was crazy. We see it taking off now. The investment is starting to come back in. And I think the next 5 years are going to be quite interesting to see.
Okay, so I'm going to put you on the spot. I'm going to ask you 4 yes and no questions just to kind of bring this to life, right?
Right.
Are we moving at the right pace with digital public infrastructure, yes or no?
Yes.
All right. Are you actually seeing the regulator solve for cross-border harmonization and actually coming up with regulatory policies which make things like repatriation or capital easier or not?
A yes or no might be difficult. I think there is some work, but not enough.
All right. Banks, are they collaborating with fintechs? Because I actually don't think this is an either-or battle.
It is. They are collaborating big time. They've learned their lesson.
So we are seeing fintech as infrastructure now.
Yes.
Okay. And
Big
final point, are we seeing enough local investors invest, or are we still relying on cross-border money coming in?
So the answer, are we seeing lots of local investors coming? The answer is no.
Yeah.
Still lots of money coming from out. But there's a growth path there.
Okay.
It has a history. It's a conversation around how culturally people have seen investment, have thought about investment. And so, yeah, that's still on a growth path. You still find it, significantly easier to source money from off the continent than there is in the continent. Actually, I think by and large, and you're right to ask that question, it is an area that we need to organize because that's the money that has the risk appetite for the places where we come from.
Plus, it has the halo effect, right? If
Absolutely.
I'm a foreign investor, I actually want the anchor to be local who understands it because at the end of the day, I'll never know the market as well as someone who's locally embedded in the system.
Yes, we are seeing some of those. It's not enough.
Yeah.
We still need to see more of it. But it's on the growth path. There are a couple of investors who are coming in, but also even them, because they are new in the game, they feel much more comfortable if certain fintechs are backed up by other big names, which is usually the game.
Yeah, it's a bit of a, I guess, a virtuous cycle.
Correct, right? Because sometimes in their own right, as and even us as fintechs, we've had that hangover, especially as you grow. All of us want a big name behind us, because that's when you convince the world that I'm actually serious, a serious party doing something great. Sometimes I think that's, if I mention some names of African investors, you possibly may not know them. Mm-hmm. And it's a question of, is it just about the names or the money to create a change on the continent? There are some who are coming in who have the appetite to see this space promising and is growing, but we still need to see more of those guys come to the forefront.
Thank you. I think that helps us sort of paint the picture. I'm going to switch topics. Here's when I start becoming unpopular, right? So we've got about 500 million mobile money users in the world, right?
Right.
And 50% of that are in the African nation, if I may use that term, right? But all the statistics that I read is while mobile money penetration is very impressive, it continues to grow, it still remains fairly unaffordable, and especially on the receive end and the cash out end.
Right.
So simple question for you. I know it's a little bit philosophical, so please bring it down to earth. Can there be financial inclusion without affordability?
That's a very interesting question. So let's try and unpack it. Definitely, financial inclusion must come with affordability. However, we've also seen financial inclusion at a significant premium. And it's just because people are desperate for that financial inclusion, which means whoever comes in with the right level of affordability will start picking part of that cake. But we see it in any normal way of doing business. When we take first mover advantage, you always have an advantage of taking premium pricing because you're the first mover, you've taken the risk. That will fall off with time. We saw it with banks. Now you can see, because now mobile money came in. Just go to Africa and you see bank charges and fees. It will tell you the story. Mm-hmm. So you've been forced to see that going. So there's going to be a lot of innovation that happens in that space that will move the money move. But let's be real. Mm-hmm. What makes it costly? I am yet to understand why it gets costly, because it's just moving money from one place to another. Technology is technology. We've built and it's already mature. You would think it should be affordable. I think it's, again, a space of although we think we've created enough in the mobile money space, there's still room to create. And all this creates space for disruption. Because if people cannot afford, they'll go to somebody they can afford. The second thing is that, as I said, there's also a high cost of doing business. Sometimes it can be quite a high cost of doing business across the, Sub-Saharan Africa. As we said, the infrastructure, the investments that people are putting behind the technology could be significant, which translates into their cost of doing business, and they need to transfer part of that cost to the consumer. Thirdly, I just think it's a bit of laziness. Laziness in terms of the players who are in the space. But again, as I said, as we continue to disrupt that space, for example, now you see an emergence of, okay, fine, you've set the rails for payment. Can we now start embedding that into where people are actually doing business? So embedded financing starts creeping in, which starts cutting part of that of that cost, which means I'm not going to sit here and wait to send money to my mother. But what was my mother going to use that money for? Then I make sure she gets that specific service, which means the cost of money moving hands and hence becoming costly, you start cutting some of this. So there's been a bit of laziness, but some of the players have taken first move advantage. We are going to see a lot of disruption in that space. Because of the desperacy and the need of the service, unfortunately, our people continue to pay a bit of a high price. That's the natural evolution of business, first move advantage. Over time, it will get disrupted and affordability will come.
Okay, so let me try and paint an analogy, and maybe it's another foolish analogy that I have come up with, right? So you take the United States as an example, right? So arguably the vanguard of financial services, with more innovation than you can sort of point a finger at, et cetera, et cetera, et cetera. I don't know if you're aware, but actually there are more payday loan shops than McDonald's.
Yes, so many.
In the United States, right? And I call the payday loan shops as some sort of a shadow financial services sector, right? Now, let's take that analogy across to Africa, right? I am assuming there is a massive alternative financial services world that exists in Africa, because let's be honest, the need for money movement, short-term credit doesn't go away, right? We all live our lives, and whether there are banks or no banks, we'll find a way to it.
Yep.
Is the problem with affordability a relative problem rather than the lazy problem? So let me tell you what it is. I'm this guy who lives in, for the sake of argument, in Kigali, right? Just because it came to
that's
my
what
mind.
you.
Right?
That's where you
it came to my mind faster, right? And I am borrowing from this payday loan equivalent store in Kigali at some crazy interest rate of 40%, right? You come along and, you are one of the more regulated, structured, businesses.
Right.
You basically turn around and say, something, I can give this person a loan for 12%, but let me just charge 24%, because I'm bringing him or her down from 40 to 24. Is that the kind of laziness are you talking about? Because for me, that's exploitative, not laziness.
I think there are two things we need to look at here, the laziness part and the exploitative part, and we need to interrogate both of them. The first part is on the laziness. The laziness I was referring to is that the people who moved first, and unfortunately I don't want to mention names here, the people who moved fast and played in the space of moving money, putting the payment rails in this space, have not gotten strong challengers to force them to relook at price. And because of that laziness from the space, the price continues to be what it is, because the customer choice is quite limited. So that's what I meant by laziness. And I think we are going to see a lot of challengers come into that space. The second is now to exploitative pricing, as you talked. But you see, you are combining payment and credit. The first part on laziness was largely on the payment space, because choice is limited, and because of that, customers continue to pay a high price. On credit, it's a totally different monster. There are about 3 significant things you need to think through on the continent. The first one is data, availability of data. And that's why many companies are investing in platforms that use alternative data, Furaha being one of them. We are building an IP that can enable us be best in class in using alternative data to arrive at a sensible credit score for a person who has not been in a money economy. The traditional ways of using bureaus are going to be a far moving thing for the continent. You know, the thing is, technology has shifted things so fast and you need to catch up so quickly. So by the time you wait to build a credit bureau that has 10 million in a country, and we've talked about 55 countries, it's definitely going to take long. How do you bring it so quickly? So the first thing, the real cost of data is risk. And to do that risk, you need data. Are we doing a lot of risk-based pricing? Significantly, yes, because that's why banks still lend at much lower rates to people who are banking with them that they know, which is obvious. So the first challenge has been the cost of risk, which is driven by availability of data. That's the first part. The second thing that has been driving credit is availability of money, right? Of money to actually lend out. So one of the challenges, I'll tell you, Arjun, is that generally governments across Africa borrow a lot. And so the sources of money, we compete as lenders, we compete for the same pool of funds like governments are trying to borrow. So you'll be surprised. A government, and largely most of the borrowing is for recurrent expenditure. It's not really necessarily in the productive space. So imagine, on average, a 1-year bond going for about 12-13%. That's astonishing. And because it's going at that rate, and governments cannot, unless there is sovereignty risk and there is a default, which of course you can assess. But barring that, it's assumed that if I put my money in paper, government paper, I'll get a return. So think for a minute. If government is willing to pay 13-15% for a 1-year or 5-year bond, where would I take my money as the quickest path? So if you combine that with the risk of somebody I don't have data about, it starts going towards high cost of borrowing. Mm-hmm. But it's not all gloom. For entities like us in Furaha, one of the things that we are working on, again, using data, is to make sure that the risk-based pricing principle applies. If you have been accessing financing from us over a period of time, we should be able to give you that benefit. The final part is we are starting to force a conversation that we move away from credit that is just cash-based to purpose-driven financing. Mm-hmm. And that's why, again, as Furaha, that's why our focus is in those areas, purpose-driven. Why are people borrowing? We need to think through that. When I look at the UAE as an example, very rarely do you hear of something called a personal loan. Very rarely. If you want to buy a house, you go get a mortgage. If you want to buy a car, you go take a car loan. You possibly have a credit card for any other spend that you may have. But very rarely do I hear something called a personal loan. It's very rare to hear somebody is going to borrow for them to pick cash and put it in their pocket. So we're trying to drive that narrative, to put a significant shift so that credit works for the people. Because I think there's a lot of also appetite to borrow and less impact on people's lives. But if we start pushing the narrative around purpose-driven lending, then we start impacting lives. if we have given an education loan and we're paying the money directly to the school, the child has got school to benefit from that credit, and there's no misuse to it. And you can do exactly the same if you're talking about energy, if you're talking about any other thing, the reason for borrowing. So a combination of that, of those three factors, cost of credit, government borrowing, and so people who have the money have alternatives which gives them a better return at less risk, and then misuse, which is cash and creates appetite that may not be impactful, creates all those things that lead up to cost of borrowing.
Interesting. So I think it's the right time to sort of unveil Furaha,
Yeah.
right? So why don't you tell us a little bit about Furaha? I've got a couple of other questions to add to it. What does it actually mean?
Yeah.
Is there a meaning behind the name? And the sector that you chose, why that? Because, there's, as you said, there are a number of purposes that people have in their lives, and you've chosen one. I'll let you unveil. But then most interestingly for me, why the country where it actually all started. So, tell us a little bit about Furaha.
That's interesting. So Furaha is actually a Swahili word. Did you know?
No, I did not.
Okay, so.
Well, I did. I don't know what the word means, though.
Yeah. So Furaha, for your audience who are Swahili speakers, especially from Eastern Africa, they will relate to the word Furaha. Furaha means joy, happiness, excitement. And we thought about this when we were starting this company, and I painted a picture of myself and the excitement my parents had when I graduated from uni. Coincidentally, my niece yesterday graduated at university, and when my sister sent me photos at the graduation, I couldn't go. I had a few challenges with my travel schedules. Coincidentally, when I saw those photos, it reminded me of the day I graduated, and the joy and the happiness and the excitement that came with it because you've attained an education. So the word Furaha was really an intent to say that joy, it's not just about you as a child. In fact, in bigger part, it's to the parent and the community in which you live. But more importantly, it is the outcome of that education you've gotten that it can have on society. I've had this argument and said that people think that the development of Sub-Saharan Africa is going to be multifaceted. And I have a strong view that development of human capital is going to be the bedrock of this. Mm-hmm. And I strongly believe that I look at some of, and I don't want to be political, but I look at some of the deals we negotiate as countries, and you've had this conversation around Africa's minerals, Africa's resources. And I look at some of these negotiations, and I'm thinking, and I'm not saying that we don't have fantastic lawyers, but I'm thinking, how is it that sometimes these deals don't go the right way we want? Anyway, back to Furaha. So our intent was to bring the joy that comes with achievement of something that you've been longing and looking for. And, education was a natural fit. And I'll tell you how it came about. I built 9 digital banks across Africa. And during my time doing that, when I ran digital banking for Africa and the Middle East, one of the key concerns of the people was around, access to financing for specific needs. And so when we did a study, education came out very, very strongly. And it's not a coincidence. Very young demographic. On average, Africa is the most, fastest growing population. It was obvious that this will be one of the most important things. People have the desire to educate their children. That's that at the, it's like one of the biggest spends every African has, to make their children better than who they are. But unfortunately, that most of the time hits a wall. I'll give you some numbers. So UNESCO has gone and painted a picture on the gap of financing across education globally, which it has put at about $97 billion every year. And your guess is as good as mine, 70 billion of that is in Sub-Saharan Africa. that gap. And I didn't know all this. So people are speaking. I've not done all this research. But when we start doing the research, it becomes even a more compelling story. And so my partner and I, the conversations were all involved in this digital banking, enrollment. Ian and I sat down, and the question was, how do we solve this problem? We're just small players. And, we were very convinced that we can make a difference. And so what we then did was, how do we become a catalyst and an enabler of people, of multiple organizations that are not thinking together, and bring them to the table through a technology platform and solve a problem? And that's our thinking, and that's what we've done. So Furaha is just a technology platform that has built an ecosystem of like-minded players to solve specific purposes. The first one being education loans that we have started with. So in this ecosystem, as an example, for us, we're just a catalyst sitting in the middle. So we source data from the telcos. So telcos are part of the ecosystem and already plugged into the system. We are able to pick customer data, alternative data on their mobile wallets, which we use as a baseline for credit modeling. But we also use the telcos for disbursement of the money to the schools. Second, we have an ecosystem. In the ecosystem is schools. Mm-hmm. In Uganda, we have already plugged into 14,000 schools, which gives us access to 6 million kids. So you have 6 million kids in that ecosystem already plugged in, because they are the ones who need the school fees, isn't it?
Yep.
Which has to be brought in, and the schools are the recipients of the school fees. Then we go and get banks. Banks bring the balance sheet, because we're not lenders. So we bring banks and show them why it is important for them to meet this need. To them, it is another line of business, but the one thing we've really been engaging with them to have a discussion on is, this is not just credit. Back to our offline conversation, we are channeling money to where it is needed most. Mm-hmm. So banks provide the balance sheet. And then, of course, we do have other sources of data, credit bureaus, etc. So Furaha is a technology company sitting in the middle, orchestrating. We are the conductors of the orchestra, bringing together multiple players to create that ecosystem to solve purpose.
Why
problems.
Uganda?
Very interesting. So we chose Uganda for various reasons. The first one was that it is a very vibrant market.
Okay.
It's a vibrant market with a very enabling regulatory environment around these spaces. It is one of those that is really growing very fast and enabling a fintech space move quickly for testing and getting things going. Not yet at the level or in terms of numbers you see in Nairobi and Lagos and Joburg, but really taking off. The second thing why we started there was largely because, again, from a financial institution's perspective, you could orchestrate something that can work regionally. So we do have banks that operate in Uganda, and because you can test a POC there, you can do a POC there, you are able to translate it regionally. Our aim is to get into at least 10 markets in the next 5 years and have an impact across 10 million kids. And so to do that, do a POC in a relatively possibly market that is not as huge and challenging on various fronts like the ones I mentioned earlier, and use that as a springboard to go across. Of course, the other part is that's where I come from. I come from Uganda. So again, for any startup, it's usually great to start from where you know best. I think it's a common engagement. And I think, our start has not been so bad. We've had a good run. So, it's moving in the right direction.
Great. Yustus, let me ask you a question, right? $70 billion, massive funding gap. You could see that as your TAM, SAM, whichever way you want to cut it, right? But here's the question I have, right? Financial services, fintech have a role to play. But how much of this is public policy, right? Because to me, I think, and maybe Uganda has the right public policy, and so therefore it made perfect sense for you to do it. So that's one part to my question. My second part to the question here is, I've been educated in the West, in the US, and so on and so forth. And one of the biggest problems we have in the US with the youth coming out is basically college debt, right? Which is basically affordability to be able to make it through college, right? Although I think colleges in America charge predatory pricing in terms of crazy amount of money, right?
Yeah.
You could, right? So the second part of the question is, are you potentially creating a massive credit bubble for the economy, which will come to bite these people in the wrong parts of their body? And let me just ask the final question, which is, it's very, very interesting to see that while I'm not surprised that education came up, at the top of the pile in terms of requirements, I would have imagined, a roof on your head, right? So it would have been more critical. Mobility, healthcare, right? Because all of these areas have massive gaps in Africa too. So what was the so attractive about the education piece, where you said, this is what we're going to go after and ignore them? I'm sorry, I've packed a lot of things into one question, but I'd rather have you sort of have a go at this, because I'm sure there's some interconnectivity in all of this stuff.
Very good questions. Let's start with the first one. 70 billion. How much can fintechs solve? Is it more of government policy? So let me be very clear. This is not a problem that fintechs will solve. Fintechs like us don't have the money to lend, but the money exists in the ecosystem.
Okay.
I'll just give you an example. We've so far gotten 4 banks on our platform, and each one of them is committing initially $10 million worth of lending. And once you revolve that money 4 times a year, right? It's about $160 million worth of lending in one country. Mm-hmm. Our job was to unlock the redundant money sitting in commercial banks to go to spaces where it is required in a very enabling manner. Yeah? So that's the first thing that I think, if you talk about fintechs enabling, maybe that we can unlock and play a part. Are we going to solve the entire problem? Absolutely not. But as Furaha, that is our intent. Unlock lazy money sitting in these spaces. I mean, you'll be shocked that asset to deposit ratio in most of the commercial banks across Africa is hardly 30%. There's a lot of redundant money sitting there, most of it, going to paper, which I talked about. But that's one part. The big chunk of this 70 billion indeed is around policy. It's not all just about financing for kids to go to school. It's about how a teacher is being paid. It's about our classrooms equipped, etc. So it combines all that.
Okay.
But a significant chunk is on actually facilitating the child to go to class.
Okay.
I'll give you a sense.
That's a good point.
In Uganda, a study was done. So Uganda has 3 phases of an education system, if I'm not 3 or 4. Primary 1, which starts when a child is 6, and it stops at primary 7 when a child is about 13 years. Then you start secondary school from senior 1 to senior 4, which is junior secondary school, and then high school, which is senior 5 and senior 6. So that is the 3rd level. And once you finish that, you go to university. In 2024, the kids who start senior 6 should have started school, just remind me, around 2013, so to say, because it's 13 years, 2012?
Yeah, 12 years, 13 years, correct.
1.8 million children started primary 1. 1.87 million children started primary 1 in 2012. Only 178,000 children sat senior 6 exam to go to university. I want that to sink in. It's almost a 90% drop-off rate. And that's stuff I'm passionate about. It's stuff that I hope Furaha can play a part. Even before we talk about university, before we talk about college, which we talked about, I'm actually less worried about, university. If you have been educated over this period of time, you can actually substantially do something for yourself.
Yeah.
But that's why we have a big challenge. And so our first part of solving this problem is dealing with that cohort of students. The second things we do is we advance credit to the parent. Because in this age group, you can see it's still under 18. So we're not lending to the student, we're actually lending to the parent. The credit underwriting is on the parent. They recycle this money. The facility is for a school term season, which is a 3 months journey, and then you can repeat and come back. So we tend to make sure it is more of a cash flow matter than actually a credit facility.
For liquidity.
Liquidity, solving for liquidity. And I think that goes a long way in solving the problem. So we really want to focus on that. Your last question was, of all other things, education, why not mobility, why not this? As I said earlier, I can bet you human capital development is going to be the bedrock of Africa's development. And if we don't get that right, even the whole mobility space is not going to move. It is there. It's our biggest problem around mobility. If I want to make money quickly, I can go into that space, but it's still not such a thriving space that is going to concern me. But maybe that begs the question, outside education, what is the next step? So we've looked at education and we've modeled our business around transforming a household. A child, we've enabled the parent pay school fees for this child. But we still have a problem of access to power. This child comes home from school at 5 o'clock, 6 o'clock. At 7 o'clock, they are going to bed because they have no power. There's no electricity. So our next point is, what if we gave access to power to this family? If you give them power, a solar panel that can actually light 3 lamps, and this child pushes in another 2 hours of study, they become a bit more competitive. So not only are they just going to school, they're actually studying and putting in extra effort. So there is space to play in the power area. Or additionally, there's space to do with alternative energy. Almost 90% of Africa still uses charcoals and firewood to do their cooking, which impacts their health and other things that you can deal with. So what if we actually enable these families get access to clean energy, LPG and all other sources, again, with the purpose, funding the exact product, and it's given to the household. We do have ambition actually in the transport sector. It is also on our cards, an area we are looking at and working with potential partners. But our intent is build development around this education product and then expand to make sure that this child who has come out of the program that Furaha has started with an education financing through the parents can actually look at other bigger things that can be created as products.
Interesting. Let me ask. I know I'm cognizant of time. Couple more questions, very, so that we can finish on a high. Just on your business model, you access data out of telcos. Your balance sheet is provided by banks. Potentially, there are other ecosystem partners who work across your value chain. You have your own business, which is now got a couple of straight challenges. One is your business model is evolving as you go into other, if I may say, other needs.
Right.
And also geographically, I'm sure you're looking at adjacent markets, and that comes with all the challenges with compliance. So there's a number of parts or number of ecosystem players who are sort of eating out of the pie. Right? How do you continue to make sufficient money without getting into our first conversation, predatory pricing?
So the first thing is, we are very fortunate to be incubated as a corporate fintech. And there's a big difference between a corporate incubated fintech from someone who is bootstrapping from scratch. And again, a huge shout out to Standard Chartered Ventures because they've developed the expertise in terms of helping you along the way as you build all these models. So I don't have to worry a lot, for example, around, the governance and the compliance requirements and all that. Standard Chartered Ventures kind of makes life easy in dealing with this as I think through business models. So that's one part that, of course, some of us like Furaha have gotten an advantage of compared to other startups I see. The second thing is that one of the partnerships are playing a very important role. One of our mantras as Furaha is build scale. Don't worry about pricing now. Build scale. Pricing and revenue are an outcome of the scale you have. Mm-hmm. If you think with me, Arjun, if I have 20 million, 30 million, 50 million users on this platform across 10 markets, it's an easy game in terms of revenue. So at the moment, we are not worried about pricing. We are not worried about this. But also one of the other drivers we have is that because we're a purpose-driven lending platform, we are avoiding predatory pricing. And that's why customers are coming to us. I mean, we have some crazy growth that is quite unprecedented. And in fact, even the banks we are dealing with at first felt, are you not outpricing yourselves? And we said, no, this is a purpose. If a parent is taking money to take a child to school, you need to look at this differently. Mm-hmm. Because you are ring-fencing the risk. You are trying to minimize misuse. You are taking out fraud. Why should the cost be so high? So we are cognizant of that, of our partners and the interest of making money. That does not go away because we're not a charity. It's a commercially viable proposition. Yep. The growth path we are taking, because as I said, we've been fortunate to be incubated by Standard Chartered Ventures. They keep us honest in terms of, where do we go, what do we do. We are doing some work to get into Tanzania and Zambia as the next set of markets. And it's a natural progression. We also, in those, we've done our studies, we've done our homework. We have regional partners who trust that what we're doing is the right thing. And that's the beauty of starting where we started. So if you create partnership around the telcos that we've talked about, which play regionally, you work with banks which play regionally, then it starts becoming a natural progression and you build that partnership that is great. I think it's about steady growth. It's about understanding your partners and definitely making sure that partnerships are going to be the lead in making sure we succeed.
Interesting. Last question, Yustus.
Yeah.
5 years from now, where are you going to be? Are you going to fold back into Standard Chartered Ventures? Are we seeing the emergence of a multi-market digital bank? Or I think you'll just replicate yourself as a platform orchestrator in different markets?
Look, we have our plan, but again, we don't take to look too far from what we need to get to do next year, in the next 12 months. But certainly, we see Furaha evolving into a bigger financial player as a standalone financial institution that can actually be SDG driven, so to say. We think we have a space there. We think Africa presents an opportunity where purpose-driven lending becomes even more interesting. You think of the health sector. Mm-hmm. You think of diagnostics. In the SME space, the number of clinics coming up with diagnostics. Imagine if that guy comes to us and he gets the equipment he needs and avoids misuse of money. So we see ourselves playing in that space, enabling purpose-driven credit as an anchor to people playing out. 5 years from today, if we can move in that space and become a real big player in the financial services industry, in whatever form and shape, we think we could be a big player as a financial service provider, possibly bigger than just being a platform. Early days, but quite ambitious.
No, and I'm sure you will. And it's a good story. I do believe fintech for good is a business model.
Yeah.
We can call it purpose-driven credit or any other segment. I think, I cannot disagree with you that, human capital development is going to be a bedrock in terms of the emergence of Africa as a nation, largely because it's a diverse, extremely large, and a very young population.
Yeah.
And I guess the numbers that you shared with me are staggering. So, even if we can move the needle by a few percentages between, as you said, kids getting into the system and coming out of the system, even from a schooling piece, you will actually see a seismic impact on the economy and the growth it will develop. So I think, good luck. Best of luck. I will make sure that we'll stay in touch in some form or shape. And
Let's do that.
I do want to come to Uganda because I've heard actually some of the hikes are more interesting from that part of the world.
Yeah.
To go and do something. And I'm going to drag one of my daughters who is interested in wildlife. So I think we might actually be knocking on your doors and coming and having a look at Furaha's operations.
Let's do that. Let's do that. Let's plan for it. Thank you so much, Arjun. Good
Right.
conversation.
Thank you for coming.
Pleasure.
All right. So, ladies and gentlemen, that was Yustus, who is the co-founder and CEO of Furaha. As I said, it's a fintech for good. It's targeting the education sector in Uganda, but with very clear ambitions to actually expand both in terms of region and sectors. So with that, I'll say goodbye till next week. Bye-bye.